Welcome to another edition of Women Lead TV. I am Michelle Bergquist, your host today, and with me is the lovely Mary Van Dorn, who is with Connect to Credit Union. And Mary, we're going to talk about mortgages today. There's a lot going on in the industry in mortgages, right?
Yes, there is.
And I want to know, you have been in mortgages how long? You've been in a long time in the mortgage industry.
I have. I tell people I've been in mortgage banking for over 40 years.
Ah, wow. You look great. We'll go with that.
And so sometimes I lie and say 30 years, because otherwise they sound like they don't believe me, right? And I'm really, it's been just over 40 years. But I did start I actually started in high school, helping my parents in their real estate office. And shortly after I graduated, I got a job as a processing sort of receptionist at a mortgage company. And so I kept that during college, and I just never left the industry. I just love it.
And tell me why you love the industry. I'm dying to know, because to me, it's like what we've been through as far as 2008, before that in the early 90s, those two recessions, right? They were just so difficult for people.
Well, first of all, the day-to-day activities, I am an enormous numbers nerd. I love working with numbers. I've just grown up, it's always been like
nerds are cool right now, you know.
So I was doing a side hustle working with FHA in Santa Ana, the HUD office. I used to do contract underwriting. And one day I was in the office, Sam Sandoval was the director of the office, and he pulled out a book that was the original underwriting book for FHA underwriting loans. And this book was from 1934.
Tattered.
Yep,
torn.
President Roosevelt had started the HUD at that time, and it was to help people get back into buying homes, because prior to that you had to put down like 50% and your loan term was 5 or 10 years. So he came up with this program that you could put down 3.5%, et cetera. But part of the underwriting guidelines, we were looking through, and we came upon this area that said, in underwriting the loan, you have to be cautious of making a loan to an Irish family who may be purchasing in a German or Italian neighborhood.
Stop. No way.
Do not approve the loan if they're not buying in their own cultured neighborhood.
This was the original mortgage lending book.
From HUD.
Is this thing framed so you could, that's like an old book? That's crazy. Things have changed, obviously.
Tremendously. We have now, we have a lot of safeguards that we can't discriminate because of race, creed, color, sex, religion, or lack of. And we even have new applications coming out next year. Up until this point, probably for the last 10 years, we've been able to break down the lending guidelines. Are you lending to Hispanic or non-Hispanic? Well, now coming out probably next January, it'll ask if you're Hispanic, but then you can mark Puerto Rican, Cuban, Mexican, et cetera. So we're really gonna get a better idea of who we're lending on to.
I think that's cool. The mortgage industry has changed so much. Let's talk post 2008. It was awful after 2008. So many people left the industry, changed, right? Or companies and people. So for you, it's like, what made you hang in there? Even after all that was happening in 2008, so many people got out of the business. Why did you stay?
Because I've been in it long enough that I've seen the ups and downs, so I know when it goes down, it comes up. Also, as it was going up, I was seeing some of these loans being made, and I'm thinking, this isn't good. It's not good for the homeowner. It's not good for the lender. So knowing when it came down, yes, all the guidelines tightened up tremendously. But in time, those will loosen up, and they have. They continue to loosen up even still.
And catch me up today, because I know we've got short time, but it's like in this interview, what are the where are we at now? Is it easier for individuals to get mortgages again? Is it loosened up a little bit? Is it back to what I call the kind of 20% down times when that's the reasonable idea, but not 50% down in 5 and 6 years to pay them off? That's crazy.
Right. Yes, it has lightened up quite a bit. We've got 3% down, 5% down. We even have jumbo loans with 5% down up to like $850,000 sales price. So you can buy almost $1 million home and put down just barely over 5%.
But no more interest only,
They are out there, but they're what we call non-QM loans. So they will
What's
always...
QM for our viewers?
That's for the ones
me.
It's a type of loan that we're going to sell to Fannie Mae, Freddie Mac, et cetera. Those are more of your conforming type loans that all of your general lenders are going to do, or your banks. But they'll always have the one-off. Sometimes we call it a portfolio loan, like we have them at Connective. We have loans that we will do for people that don't meet all the necessary guidelines.
Okay.
And so we don't do the interest only yet. And there's also some for people that don't have good credit. They might require a higher down payment, but there's always an alternative, because you're going to pay for that. You're going to pay for it in a higher interest rate. But sometimes it's just what you need to get back in the game.
And then they refi and Hopefully. Well, I think everybody has a story in mortgage. But for you, what would be maybe some of the slices of advice today, if where we are right here in 2017, just so our viewers know, on what maybe is 3 little slices of advice if someone's thinking of buying a home right now that you see they need to keep in mind?
I think the first thing that they have to do is talk with a mortgage banker or your mortgage broker, whoever you want to get your loan through. Interview a couple of them, find somebody that you mesh with easily,
right.
And then let them pull your credit report. Take a look at it, because your credit scores determine the interest rate that you're going to get. So the higher the score, the lower the interest rate. And there's a lot of things we can do that just takes a little tweak, 1 or 2 degrees, and we can help bump your score. Sometimes I've increased scores for people up to 60 points, which makes a huge difference in qualifying. So that's important to get in ahead. Also, we can help you figure some ways to either come up with down payment that you didn't think of, or also discuss different loan programs that would be better suited for you maybe than the 30-year fixed rate. It all depends on what your goals are in the property that you're purchasing. So that would be the number one thing I would say, is get your ducks lined up so that you're a very strong buyer going into the market.
I like what you're saying about, interview a mortgage broker and a mortgage lender. What should people keep in mind with the mortgage lender? I mean, there's different types of mortgage lenders. What would be maybe the advice you would give there? I mean, it's got to be a good fit, representing a variety of different programs or loan products,
Absolutely.
I'm assuming.
If you're a first-time home buyer, you're going to be looking for somebody that does the FHA, first-time home buyers programs. Even the conventional loans go with 3% down. So that would be important to you. If you're somebody that knows I'm going to probably be selling this home in another 3 to 5 years, then look for somebody that has adjustable rate products, because you don't need to pay the interest rate on a 30-year mortgage if you're going to be paying it off in 5 or 7 years. You're better off getting a 5-year loan or 7-year loan where the interest rate is much lower. It could be a whole
I want to know
lower.
who pays off their loan in 5 to 7 years. That's my question.
You would be surprised, actually.
Really?
Yep. About 90% of the people out there will refinance
90%.
or sell their home in 7 years.
That's a fact I didn't know.
Yes.
And on that, we're going to have you back again. So I want to say thank you for being on Women Lead TV. Oh my goodness. Women Lead TV. We will be back again with another amazing guest, and we're going to have Mary, we'll have you back again for more information. So thank you for watching.